Today we are going to see chapter number 2, that is depreciation account of standard 11 commerce subject account. Today again we are going to see one more sum where we will see two machines together. From that, second machine was purchased and sold at a profit. Let's see illustration number 17. Illustration number 17. Yusuf Dodawala Corporation has purchased machine for 70,000 on 1/4/12. On 1/10/12 purchase the second machine. See here, within the first year the second machine was purchased and it was for 40,000. And on 1/10/15, before ending the third year, on January, the second machine sold at 20% profit of book value. Company provide depreciation 10% every year, reducing balance method. So here there is a reducing balance method. Prepare machine account as well as show the effect in annual account of the first year. Only first year we have to show in the final account and we have to prepare the machine account. So very first thing, let's calculate depreciation as well as profit for the profit and selling price of the machine. So let's make the working note. Illustration number 17. Working note. Okay. So here, the first machine was there, purchased on 1/4/12. First machine was purchased. So that for that it was for 70,000 first, and it was for 70,000. And within 6 months, second machine was purchased, and that was on 1/10/12. Second machine purchased. So here, second machine, and it was purchased for 40,000. So here, total depreciation that we are going to calculate. And here again. So here, at the end of the first year, that is on 31st/3/13, let's calculate the depreciation. So depreciation will be, depreciation for the first machine, it will be calculated for the whole year, that is 1/4 to 31st/3. So that will be at the rate of 10%, 7,000. And for the second machine, we have to calculate the depreciation only for 6 months, as it is purchased on 1/10. So from 10 to 3, so it will be for 6 months. So let's calculate depreciation for the second machine. So it is 40,000, 10%, and it is for the 6 month only. So that will be 2,000 only. So depreciation of the second machine for the first year will be 2,000 only. So here 7 plus 2, total depreciation for the first year will be 9,000. Here, let's find out the book value as on the end of the first year. So from 70, if we are going to deduct 7,000, that will be 63,000. From 40, if we are going to deduct 2,000, it will be 38,000. So this is the book value as on 31st/3/13. So that will be 63 plus 38. Now, let's see for the second year. So here, at the end of the second year, that will be on 31st/3/14. Let's calculate depreciation. So here, again the depreciation will be, as it is reducing balance method. So here it will be 6,300, and here it will be 3,800. So here, from 6,300, if we are going to deduct 63,000, if we are going to deduct 6,300, the balancing amount will be 56,700. 38,000, 3,800, 34,200. So this is the book value, and now let's calculate the total depreciation. So total depreciation of 6,300 and 3,800, 10,100. So this is the total depreciation for the second year. Now here this is the book value as on 31st 3/14. Now before ending the third year will be ending on 31st 3/15. But before that the second machine was sold, so that will be 30. This machine will be sold before the end of the third year. But before we are going to sold this machine, we have to calculate the depreciation, and that depreciation we have to calculate for 10 months, as from March to January it will be 10 months. So we have to calculate depreciation for the 10 months on second machine. So very first let's calculate depreciation on 31st 15. So this depreciation will be for the 10 month only, as machine will be sold on the same day. We have to calculate depreciation up to that time at the rate of 10%, and again it will be for the 10 months. So total depreciation will be 2,850 for 10 months. So here, if we are going to deduct from 34,200, 2,850, balancing amount will be 31,350. So this will be the book value. Book value of second machine on 31st 1/15. So here again they are asking us to add the profit of 20% on this. So let's add the profit portion. So here profit at 20%. So that will be 20% of 31,350. So that will be 6,270. Profit will be 6,270. So let's add the profit. So here we are going to get the selling price of the machine. That will be 37,620. So this is the selling price of second machine. And this is the profit. It's supposed to be taken to the profit and loss account. So this second machine was sold on 31st 1/15. Now at the end of the third year, that is on 31st 3/15, we have to calculate depreciation for the second machine. And the depreciation for the second machine will be at the 10% of book value, that will be 5,670. So this depreciation, if we are going to deduct, then the book value of the machine at the end of the third year will be 51,030. So this is the book value as on 31st 3/15. So this is the balance of the machine account at the end of the third year. This will be the selling price of the second machine, and this is the profit that's supposed to be taken to the profit and loss account. So third year depreciation will be 2,850 and 5,650. But here this depreciation we supposed to credit it to the machine account at the 31st Jan. It's supposed to be accounted in the January month, and this is supposed to be accounted in the month of March, as the machine is going to be sold. So we have to account depreciation on the same day. So that will be the depreciation. Okay student, you may note down this in your notebook. Then we are going to prepare machine account as well as accounting effect for the first year. the machine account as well as accounting effect in annual account for the first year. So here we have already prepared the machine account as well as here we have prepared profit and loss account as well as balance sheet. So here machine account, as we know, in the machine account on 1/4/12 we have purchased the first machine. So for that here it is a machine account, and on 1/4/12 we have purchased the first machine. So for that, to bank account, as it is purchased, so we have to write bank account and it is for 70,000. So for that, and here immediately after 6 months, that is on 1/10/12 we have purchased the second machine and that is for the 40,000. So here again to bank account 40,000, and here depreciation we have already calculated and that is on 31st/3/30 by depreciation account. And depreciation will be 7,000 plus 2,000. So total will be 9,000. That is already there in the working note. 9,000. Now let's find out the balance of the machine account. 1,10,000. 1,10,000. So from 1,10,000, if we are going to deduct 9,000, balance will be 1,01,000. So this is the balance on 31st/3/13 by balance carried down. So this is the at the end of the first year. Now let's prepare the profit and loss account, as there is a depreciation of machine, to machine depreciation account. And total depreciation is a 9,000. Then we supposed to debit it to the profit and loss account, and here in the balance sheet we have to show the machine. So total machine is of 1,10,000. So here machine account is 1,10,000 and total depreciation is 9,000. So here the balance of the machine account will be 1,01,000 at the end of the first year. Now let's continue with the machine account for the second year. So this balance we are going to brought down on 1/4/13. So here to balance brought down, and the balance will be 1,01,000, and here at the end of the second year, that is on 31st/3/14, we are going to calculate the depreciation for the second year, and that depreciation will be, we have already calculated, amount will be 66,300 plus 3,800. So total amount will be 10,100. So this is the depreciation charge on the machine. Now let's calculate the balance of the machine account at the end of the second year. So then will be 1,01,000, 1,01,000. From 1,01,000, if we are going to deduct 10,100, the balancing amount will be 90,900. So this is the balance 31st/3/14 by balance carried down. So this is the balance that's supposed to be taken to the third year, and third year will be on 1/4/14 to balance brought down, and the amount will be 90,900. So this is the total balance of the machine account. Now here, as we know, before ending third year, the second machine was sold out on 31st/1/15, and for that we have already calculated the depreciation, and depreciation account is to 2,850. This is the depreciation for the machine that is sold out. Now, the machine was sold for on 31st 115. Machine was sold for 37,620. So that will be taken to the bank account. 37,620. And here there is a profit in the sale of the machine. So that profit is supposed to be debited to the machine account on the same day, 31st 1st 15. 2. Profit and loss account. And this is the profit portion of the machine. And that is 6,270. We already calculated in the working note. Now, on the year ending, that is on 31st 3/15, we are going to provide a depreciation for the second machine, and that depreciation amount is depreciation account, and the amount of depreciation is 5,670. So this is the depreciation amount for the second machine. Now, let's close the machine account and find out the balance of the machine account. So here 90,900 plus 6,270. So total of that will be 97,170. This amount we are going to take to the credit side. 97,170. From this, if we are going to deduct 2,850, 37,620, 5,670. So the balancing amount is 51,030. This is already we have calculated in the working note. So that is on 31st 3/15 by balance carried down. So this is how we are supposed to prepare the machine account as well as accounting effect. Students, you may note down this in your notebook. Thank you for watching this video.